Campbell's company is still wrestling with challenges in its snack division, and the story isn't getting any simpler. Despite some pockets of improvement during the fourth quarter of fiscal 2025, the overall sales for the snack segment dropped by 4% over the entire fiscal year ending August 3rd. But here's where it gets controversial. While some might see this as a temporary setback, others could argue it signals deeper structural issues within the snacking market that Campbell's needs to address urgently. Mick Beekhuizen, Campbell's president and CEO, shared insights during the September 3rd earnings call, acknowledging the ongoing pressure on snacking categories. He noted, although we saw some encouraging sequential improvements in our in-market results during Q4, consumption still declined by 2% compared to last year. He further explained that organic net sales fell by 2%, primarily due to lower volume and product mix. But there was a silver lining, as this was an improvement over the third quarter, thanks to better net price realization. Looking at the company as a whole, Campbell's reported net earnings of $602 million, or $2.02 per share, marking a 6% increase from $567 million, or $1.90 per share in the previous fiscal year. Net sales rose 6% to $10.25 billion from $9.64 billion, largely fueled by the acquisition of Sovos Brands Inc., which was finalized on March 12, 2024. The company also pointed out that an extra week in the 2025 fiscal year contributed about 2% to net sales. However, volume and product mix were down 1%, reflecting some challenges in maintaining sales momentum organically. Focusing back on snacks, annual sales slipped to $4.20 billion from $4.38 billion, with both organic sales and volume mix declining by 3%. Campbell's is optimistic though, forecasting that the snacks division will stabilize in the latter half of fiscal 2026. With modest net price contributions compared to fiscal 2025. But is this optimism justified? Or are they underestimating the competitive pressures in the snacking space? Now, let's talk about some bright spots. In the fourth quarter, snack sales reached $1.12 billion, a 2% increase from $1.09 billion in the same period last year. The Milano cookie brand, in particular, made a notable impact, with dollar consumption rising 7% year-over-year in Q4. This helped boost the overall Pepperidge Farm cookie business by 3% in dollar consumption during the quarter. Beekhuizen expressed excitement about expanding the white chocolate product line with seasonal limited-time offers, LTOs, such as the popular Milano chai latte flavor, which they expect will drive sustained growth through innovation. The Goldfish brand also showed signs of life, improving sequentially from Q3 in both dollar consumption and market share. Beekhuizen highlighted that new flavors, limited time offers, and better multi-pack performance have started to reignite the brand's momentum. However, he was candid in admitting there's still more work ahead. With increased marketing support and strategic promotions, he's confident Goldfish can return to its historical growth path. But here's the question. Will these efforts be enough to fend off competitors in a crowded snack aisle? On the fresh bakery front, consumption declined in Q4. Yet farmhouse buns and rolls gained traction. Meanwhile, pretzels, chips, and crackers experienced share losses during the quarter. Still, some key brands showed sequential improvement compared to Q3. For example, Snack Factory saw growth in in-market consumption and gained market share for the second consecutive quarter, thanks to successful innovations like Pop-Ums and Bites. In the chips category, Kettle and Late July brands improved sequentially, benefiting from the growing consumer demand for better-for-you snack options. Turning to meals and beverages, fiscal year sales climbed 15% to $6.05 billion from $5.26 billion. Volume and product mix increased by 1%, while organic sales remained flat. A standout performer here is the Rouse brand, part of the Sovos acquisition, which is approaching the impressive milestone of $1 billion in annual sales. To put this in perspective, Campbell's, Goldfish, and Pepperidge Farm brands each already generate over $1 billion annually. Fourth quarter sales in this segment were $1.202 billion, slightly up from $1.2 billion in the same quarter last year. Beekhuizen noted that the Rouse Sauces brand is nearing the $1 billion mark, underscoring its growing importance within Campbell's portfolio. Meanwhile, the soup category performed largely in line with the market during Q4. However, Campbell's total wet soup market share declined by 0.8 points, mainly due to the discontinuation of the Well Yes brand, which offset gains made by other products in the lineup. For the fourth quarter overall, the company posted net earnings of $145 million or 49 cents per share, a significant turnaround from a $3 million loss in the same quarter the previous year. Net sales increased 1% to $2.32 billion from $2.29 billion. Beekhuizen described the earnings as slightly ahead of expectations, crediting the company's ability to navigate a dynamic and challenging operating environment. Looking ahead to fiscal 2026, Campbell's projects organic sales to range between a 1% decline and a 1% increase. Inflation, excluding tariff impacts, is expected to remain in the low single digits. Tariffs themselves are anticipated to account for about 4% of the cost of products sold. But Campbell's has strategies in place to offset roughly 60% of this tariff burden. So, what does all this mean for Campbell's? While there are clear signs of resilience and pockets of growth, especially in meals and beverages and certain snack brands, the persistent struggles in the snacks division raise important questions. Can Campbell's successfully turn around its snack business in a highly competitive market? Or are these challenges a sign of deeper shifts in consumer preferences that require a more radical rethink? We'd love to hear your thoughts. Do you agree with Campbell's optimistic outlook? Or do you see storm clouds ahead? Share your perspective in the comments below.